Hello traders, welcome to the TMT Daily Strategy video for Tuesday, May 29th. I'm getting this video out on a Sunday night, Memorial Day weekend. Hope all of you are enjoying your Memorial Day weekend, a long weekend. We are off tomorrow. Futures are open for a half day, limited session. And I just wanted to get this out so you guys can watch the video at your time, in your own time that you want to relax and not rush going into a trading day. So again, hope everybody's enjoying the weekend with family and friends. A little rainy here on the East Coast, but nonetheless still a day off. And tomorrow, which is Monday, is going to be the Memorial Day holiday. And right to the markets, guys. I've been doing a lot of research over the weekend. We did get we were up in the overnight in the pre-market Friday, and then we just sold off pretty hard. A lot of that move was taken back from the previous recovery. But do I still think that the market goes high? Yeah, I actually do. I think even more so. They're trying to get everybody short in the market so they can squeeze this market higher one more time. We talked about that. We're going to look at some another chart of the ES, the 60-minute chart, just basically price and volume, show you what we're looking at and why the market basically has stalled at the 2745 area in the ES. We've been sideways for about 10 trading days now, which is fine. You're at the upper end of the range. We broke out of that symmetrical triangle that we identified weeks ago, and now we're looking for higher price. It doesn't have to happen. We all know that. But the path of least resistance is to the upside. We talked about this as well. We're also going to talk about crude oil and how you guys made some really big money the last couple of days. I mean, XLE, SLB, you pick it, and they got crushed. They got hammered. And like we said, right? I mean, if you do our analysis work and you start looking at short, and I said, start looking for possible short and get into these pullbacks, I wouldn't buy them up here. And sure enough, great trade in XLE. I mean, they got hammered yesterday. Filled the gap that we were talking about, and then we're going to now reevaluate and see where we go. And we'll look at the commitment of trader reports as well. So let's get right to it. All right, so now we have the ES here, as you can see clearly that we sold off. We were up about 6-7 handles in the pre-market, and then we just kind of rolled over miserably. So that took the cue that really made that market really had a bearish tone pretty much most of the day. But you can see we tried to break out of the 15-minute range. We failed. And more than likely, that was really a spot. Look at his lower lows and lower highs, and then we went sideways pretty much most of the day. But let me show you the 15-minute chart. I'm sorry, 60-minute chart. Here's a 60-minute ES. And what we did was we just put Fibonacci retracements, right? Our old Fibonacci, Leonardo Fibonacci. And we did from the high to low here from the meltdown in February. Then we did from high to low here back in March. And what do we have? Well, we have exactly where we're looking at a 2745, 2750 Fibonacci cluster. And what that is that's going to give you the area of resistance. And that's where this market has gone sideways since pretty much most of May, looking for another path to move higher and or lower. So we do have support here at the 2712, let's say 2715, and then 2745. So we're sideways. We need to take this area out. Now, here's the bullish theme that I'm trying to get at. If we take out the 2745, 2750, all right, look at the volume profile, all right? Let me just show you. We go back a little bit. And here's that 2745. Look at the thin zone we have up here. That means that it should take a violent move to the upside, taking all of the shorts out. Because, why? Because a lot of the shorts have their buy stops above 2750, 2755. And if that gets taken out, guys, you're going to see a beeline move to 2800, and then possibly, just possibly, a move to challenge the highs. And I know it might sound crazy, but it is absolutely possible, all right, before this market corrects. And that's what I've been kind of saying to you guys pretty much on the videos. We got a couple more gaps that need to get filled. And let me show you the daily chart. And these are the daily ESs. You can see here the 2747 to 55. That's going to get filled, but that's also going to take out that area of resistance. And then you can see here off the daily chart yet again, very thin zone. So this is a big area. This is a very big area right here. All right, and if we lose that area, that means meaning that this becomes support. you're going to see the next area get taken out, and then ultimately the gap fill way up above, if not even challenge the highs or make new highs before the market pulls back. Okay? Now, remember, anything can happen. These are just scenarios that we're playing out. All gaps get filled at one point, and I've been telling you that for a while. And you can see that the gaps have been getting filled while the market was down here. So we're going sideways, pretty decent. I like it. I like the fact that we're sideways. Let's see what happens on Tuesday. Actually, you should even look at the futures tonight, Sunday night into tomorrow. They really don't mean much, though. I'll tell you why. Because once the market does something, I mean, if the market were to rally while we're off, that's great, and then really gap up on Tuesday, that would be dynamite. And get the bullish case going here, okay? But you can see these are the areas of support and resistance. 27.16 remains support, 27.15, and then up in here the 26.92, all right? And next area of support. Most of these are doing the same thing. YM sideways consolidation. You can see that here. 24.934, and then 25,000 will be your area of resistance. 24.401 will be your area of support in the YM. Next is going to be the transports. Now, this is what's doing really well. I like to say that we have transports here starting to break out new highs. Excuse me, breaking out here, not new highs, but breaking out of the current condition. So we're challenging this swing high here right now, but we are above our horizontal trend line support, which is the 196 area. 199.16 will remain resistance, and again 196 will remain support. 195, excuse me. I like the way the MACD and RSI are working, and we have that thin zone here. Now we're starting to break out. If we can see that from here, we should start to move higher, pending no geopolitical uncertainties or announcements of war and fighting and this and that. We should be able to move higher from here. But I do like the transports, very constructive. NASDAQ. Same thing, sideways consolidation. We're right underneath that one gap fill here, which I would suspect that we would fill that gap. 69.73 is resistance all the way up to that 70.52. That'll be the gap fill, and then we'll challenge the highs from here. Again, constructive, higher highs and higher lows of MACD and RSI, looking really, really good here. Even though Friday wasn't anything to write home about, I do like the fact that we did held a lot of the gains from Thursday's loss, that we actually ended up recovering. Again, IWM, upper end of the range, perfectly bullish, doing fine. 162.36 is resistance, and then there's nothing above. Remember, all-time highs have been achieved here, so we're going to look for that. And then, of course, the 160 area coming in as support at the upper end of that symmetrical triangle. Spiders, same thing. Horizontal support, 271.52. The break should be 274. Then that should challenge the 278 all the way up to the 280. This is your area here that needs to get taken out. But if we could take this area out here, you'll see that thin zone again. Keep an eye on that. A lot of empty spaces, meaning that there's not a lot of activity up there. So this is where all of the shorts are putting their buy stops in, right up in here. Okay? Now let's talk about crude oil. Fabuloso. That's all I got to say. Fabuloso. Great work, guys. You guys did great. Great analysis here. Crude oil. Failed breakout of the ascending triangle the next day. We went lower. And look at the move lower. We were looking at a 68 print. We got below that to 67.88. I think it goes as low as 66. We got a couple of gaps here. Remember, these gaps got to get filled. Let me show you. We got another gap in this area here, which I think that the gaps will get filled, and that's when this is what the scenario is going to be playing out right now. We got a gap area here. This got filled, and then we have we have a big gap here, and that's going to get filled. Well, actually, it almost got filled. It's not made. Well, maybe it got filled here. Hold on one second. No, it didn't. So that still needs to get filled. So we're looking at the two small little gap areas here. Let me show you here, from here to here. All right, right about there. So we're at the top end of the gap on this big one, which will come in. Let me just bring this back a little bit. That'll come in at 66.55. 66.55. That'll be the next area, and then the ultimate gap from the big move up, this last move, will be 63.64. I think anywhere in here, okay, we should have the pause for crude oil, and then that's when everybody's going to think the market is going to be a top in the market in crude, stating that, all right, the market has topped, let's go short, and then that's when the market reverses and moves higher one more time to 74.75, and that's going to be where we start legging into a bigger short in the crude oil, in a lot of the crude oil names, okay, crude oil stocks. Now, let me show you the commitment of trader reports today. Still heavily hedged, still heavily short. Remember, Mexico started its hedge, locking in $72 oil, so they're going to bring in sellers, all right? And you can see here, so this is nothing significant. So the theme remains the same, where I think that they'll get everybody short and then start to move higher yet again. So very, very good analysis work here, and this was great, guys. Let me show you XLE. This is the XLE that we put down on Thursday, right? And I said that there's the gap. We're going to need to fill the gap. And am I right or am I wrong? I mean, that is a great trade. And I'm not saying that to be right or whatever the case may be. What I want to show you is that gaps always get filled at one point. And when everybody's buying up here, so I said I wouldn't be buying this. This is going to turn and fail miserably. Double top. We tried to break out. We failed. And XLE went all the way down to the top of the TMT proprietary price channel, 74. Well, do I buy it here? No, absolutely not. You're still catching a falling knife, and I think it's still got further room to run to the downside. Let's look at SLB. Remember, the producers are more riskier than the integrated oils, the other benefits of oil from other oil companies. But when you're in exploration and producers that are out there are producing these rigs and maintaining the rigs, they get hurt the worst on the downturn, and you can see that here. Schlumberger was the best short because it never really got to the double top, so it never made it that far. And sure enough, look at this move lower, guys, right back to the base. You can see OIH, which is the oil producer, the services ETF, and you can see how this actually rallied all the way to a double top and then failed miserably back down here, right into the supply area. Okay, you can see that here. So we're going to pay attention to them. These are great trades that we're going to put out, and we're going to continue to put these out for you guys. Okay, that's crude. Let's take a look at Q's. Sideways consolidation yet again. We're looking at the 171.21 all the way down to 169.68, and then right up in here, 173.65 will be that all-time high. Now let's take a look at gold. And now GDX is playing a different picture here, painting a different picture, excuse me. We're still looking for lower prices in GDX, obviously, to tell us that gold is going to go lower. And you can see here that we really didn't go anywhere. We had an inside day from here. But let me show you what the producer, with the COT report. Another week of higher highs and higher lows, right? Meaning that the bar chart's going up, right? And this is why the speculators are getting rid of their gold, where the producers are lightening up their hedge. So that is a bullish scenario to play out, okay? Now, what do we need? Well, we need gold to break down one more time, because we know that the hedgers are reducing their hedge because they see higher gold prices again, all right? Now, it's not a timing tool. We all know this. But if oil can give us a gift and sell off one more time, meaning that if the market does rally like I anticipate it will, then gold will sell off again, because there's no need to own gold, right, so to speak. Everybody wants to own stocks. That should put this lower and then put our equity markets higher, and that'll be the bullish case to own gold around 1275, 1270, even all the way down to the 1250 area, and that's going to be